Hey there, in this video we'll talk about what a payroll tax holiday is. And my name is Josh, I'm the founder of HR University, and before we dive in, make sure to take a moment to subscribe to our channel, and that way you don't miss any of our future lessons on better understanding payroll and other relevant HR important practices. So a payroll tax holiday is a temporary suspension or reduction of payroll taxes that employees and employers pay to the government to fund Social Security and Medicare programs. Specifically, the tax holiday refers to the Social Security and Medicare payroll tax. And employees and employers continue to receive their regular paychecks during a payroll tax holiday. Still, the amount of Social Security and Medicare taxes withheld from employees' pay is reduced or eliminated, and employers don't need to pay their portion of the payroll tax. And payroll tax holidays have been used as a tool to stimulate the economy during times of economic hardship, but their effectiveness and long-term impact remains a topic of debate. And in 2010, President Barack Obama signed a payroll tax holiday into law, which reduced the Social Security payroll tax rate from 6.2% to 4.2% for employees for 2 years. And this tax holiday aimed to provide immediate financial relief to workers and stimulate the economy. Another payroll tax holiday was signed by President Trump in 2020 as a response to the COVID-19 pandemic. And this payroll tax holiday allowed employees to defer payment of their portion of Social Security payroll taxes from September 1st to December 31st, 2020. And the deferral aimed to provide workers with additional take-home pay during the pandemic. However, it's important to note that this payroll tax deferral did not apply to all workers and was ultimately a temporary measure that had to be paid back by April 30th, 2021. Now let's go ahead and discuss the pros and cons of a payroll tax holiday. So the main advantage of a payroll tax holiday is that it puts more money into the employees' pockets, which can stimulate consumer spending and help jumpstart the economy. By reducing the amount of money employees pay in payroll taxes, they then have more take-home pay, which they can spend on essential goods and services, or maybe just put in their savings. Additionally, a payroll tax holiday can provide immediate financial relief to workers struggling to make ends meet. And it's also a way for employers to reduce their labor costs, which helps them stay afloat during tough economic times. And despite the potential benefits of a payroll tax holiday, there are also several drawbacks to consider here. So first and foremost, a payroll tax holiday reduces revenue for the government, which has negative long-term effects and consequences for funding programs like Social Security and Medicare. Additionally, payroll tax holidays are expensive to implement as they require changes to the overall payroll structure and systems that employers use, and as well as what the government uses too. And they can also be administratively complex, ensuring that all workers receive the benefits of the tax holiday. Finally, some economists argue that a payroll tax holiday may not be as effective in stimulating the economy, as workers may choose to save extra money rather than actually spend it. And one of the main concerns regarding a payroll tax holiday is its impact on Social Security and Medicare funding, two critical social programs that millions of Americans depend on. And payroll taxes fund Social Security and Medicare, with employees and employers each contributing a percentage of an employee's wages. And as we know, the payroll tax holiday reduces or even eliminates the amount of payroll taxes that employees and employers must pay. Now, while this may provide temporary relief for individuals and businesses, it also does mean that less money gets to these programs. And this reduction in revenue can lead to significant long-term implications for Social Security and Medicare. Without enough funding, well, these programs may become insolvent and unable to provide the necessary benefits to retirees and individuals with disabilities. And critics argue that a payroll tax holiday is an irresponsible policy that risks the future of Social Security and Medicare. And the proponents say that the economic benefits of a payroll tax holiday outweigh the risks, and the other measures ensure that the long-term viability of these programs will exist. And the concept of a payroll tax holiday gained significant attention in 2020 in response to COVID-19 pandemic and its economic impact. In August 2020, President Trump signed an executive memorandum directing the Secretary of Treasury to allow employers to defer the withholding and payment of certain payroll taxes from September 1st, 2020 through December 31st, 2020. And as of 2023, there are no active payroll tax holiday proposals at the federal level. However, the topic remains discussed among policymakers, economists, and the general public. And a payroll tax holiday is a policy tool that can temporarily relieve individuals and businesses during economic distress. However, it's essential to carefully consider the potential long-term consequences of such a policy, particularly concerning funding for social programs like Social Security and Medicare. and any future proposals for a payroll tax holiday must consider these concerns and really evaluate them based on the overall economic impact and sustainability. And there we have it. You should now have a better understanding of what a payroll tax holiday is. And if you have just that, make sure to go ahead and like this video and subscribe to our channel. And that way you can keep up to date with all of our future videos and lessons where we talk about different things affecting payroll, as well as HR professionals and how to succeed in management and create a great organization. And again, my name is Josh. I'm the founder of HR University, and I'll go ahead and see you on some of those other videos. Cheers.